Characterize for us the current environment when it comes to deal making and whether you think the activity we've seen is sustainable and going to continue.
Great, thank you, and good morning, everybody. Look, it's a very ripe environment right now for deal making. You know what, you've been talking a lot this morning about earnings season. The reality is stocks are not really moving on earnings so much because they've had such a strong run into earnings. So companies really need to uplift guidance and have very, very strong beats in order to see further movement from here. So that creates a great environment for deal making. If you're a seller of assets, it's an attractive opportunity. And you mentioned SPACs, which is a competing pool of capital to buy assets, along with traditional IPOs and also private equity, who has a significant amount of dry powder to put to work. So as a seller of assets in this environment, it's a good opportunity to either access the regular way public capital markets or to potentially sell assets strategically as well. Thanks for the recognition on the new role. It's been great in EMEA with Citi. But certainly technology-enabled companies have been a big beneficiary, if you will. It doesn't sound like the right term, given the challenges of COVID, but certainly technology-enabled has seen a catalyst through this period of time. And I'm looking forward to being at the heart of that in Silicon Valley, but at the same time, access our companies outside in with the global network of Citi.
And I guess on that point, looking at tech specifically, there has been some concern given the tech names have been such strong outperformers in this low rate environment that could start to change as we enter a major recovery. Are you seeing any signs of appetite waning from investors when it comes to investing in tech?
We've seen it on the margins. You can see we've had somewhat of a rotation out of growth equities and into value. I don't think that's surprising though. I mean, we had such a strong rally in technology and growth stocks, particularly when the more value side of the equation perhaps had business models more exposed to this COVID time period. You mentioned airlines, as an example, but you could look at retails, you could look at hospitality. As we start to see the benefits, although not equally across the world, of vaccine deployment, then hopes of recovery start to gain traction. So it's natural we see some rotation. But technology stocks are still trading at historical high multiples, and there's still a lot of demand for growth in this low yield environment, as you highlight.